So let's take a few water. Okay, so let me go start material. Yeah, so we're going to the second part of our tutorial because we have done the first part and the video is recorded and it's on the YouTube channel and the material is also there, like the summary note is all there, so you can check it. We have done all this one, we have done all this for real. So you check. In fact, we even did that one with a lot of questions. We asked some questions and all that. So what we try to do now is like after this lecture, the next meeting we're having, we'll just do past question paper. We'll just answer past question paper and see how it's going to be. We have done accounting concept, yeah. We, yeah, we have done this. All these things we have done. So fine. Yeah, we have looked at. Oh wow, we have actually. Wow, this course is. Have we done this? Yes, but we are actually in the in the module two. Perfect. So this is where we are today, right? So we are here. So we are going to look at this guy very carefully, and then we understand it carefully. So so as we'll do it, so this is the material I'm going to be using, right? So this is like the tutorial summary that I have done, right? So as we do it after this meeting, I'm going to send this material also to I'll upload it. Like I said, if you go to let me say the YouTube, like the tutorial that we just had this afternoon, if you go to the channel, right? If you go to the channel and now the video is slow, so you check the video, that particular video. This is a video here, right? So if you click on the video, this video, use this song to some. If you look at the description of the video, you will see that there is a link here. Download the past question solution. So the past question that we answered is here. So once you come to the description of the channel, you see I click on it, it's in my drive. Do you understand? Can you see? So this is it. Once you click on it, it will open this file for you to download. Can you see? It's a past question that we have solved. So once we are posting a video on the YouTube channel, we are going to share the link of the material here here for people to once we get the video, we get the so even if in this now that even if you join the tutorial live, if you need the material anyone for the tutorial, you can just get the link here to download it. So I hope that's cool. Okay, so yeah, so this is where we will continue. Okay, so one more time, confirm that you can hear me. Just with a thumbs with an emoji or whatever. Okay, Titi, thank you. Okay, so today we'll be looking at something interesting. Yeah, we'll be looking at something very interesting the in our 803. That is principles of accounting. So we we look at this is on the module two of this material here. Which one? Yep, this one. So this we are going to start module two. So we are actually going to focus on study one, two, one, three, and four by God's grace. So we look at the first one here. So we have, by way of introduction, I want to welcome you guys to this study session. Now, we're going to start with this one. Now, this thing here, this definition here, you see it's long, but it's basically very simple thing. It said that a ledger is an accounting book that facilitates the transfer of all journals entries in a chronicle sequence to individual accounts. So the process of recording journal entries into the ledger is called posting. Now, a ledger record classified and summarized financial information from journals. Okay. So basically, what this means is, what this means is very simple, right? So if I go to this summary here, what I put this to say, a ledger is just the final home of all accounting record. It's a book or an electronic file where each account has its own page showing all debit and credit. Do you understand? So you can think of it as the master record tool that gather all information about a particular item, like the cash, the rent, the sales, and the delta. So all these things are inside this book. Now, this is just like a book in accounting. I don't know who has done accounting that is in this course, but maybe the person have like a real background of what we're talking about here. But this particular model, it's actually trying to just focus on the fundament. Like if you look at this now from, I want to go to the material itself to show you something. So if you look at the study session, the study session, they have about three of them, one to three, which we're going to focus on them all. So we look at the ledger, we go to trial balance, final accounts of income statement, and final account of statement of financial position. So we are looking at this one. We are looking at the ledger here. So it has some certain characteristics, and what are the characteristics that made up this book? So a ledger has the following main characteristics. It has two identical sides, and then that's the left side, and that is which is for the debit side, and we have the right hand side, which is for the credit side. Now the debit aspect of all the debit aspect of all the transactions are recorded on the left hand side, right? And then the credit aspect of it are going to be on the right hand side. So these are the characteristic of it. They said that one of it is it have two identical side. The left hand side is for the debit side, and the right hand side is for the credit side. And then the debit aspect of the transactions are recorded on the left hand side. It's just like the same thing they are saying. And these are all the transactions that carried on. So what is transaction? Transactions are actually items that has a price or has monetary value on it. Do you understand? Item that has money on it. So all transactions that are debit. So for instance, in your account now, let's say your bank account, you pay for you buy chin chin, you pay. That's a transaction. Do you understand? And then somebody send you money. It's also a transaction. But that one is that you can see you bought something. That is going to be on your left hand side. And then somebody credit you, that is going to be on your right hand side. Do you understand? So all those things. And then the difference of the total of two sides represent the balance. You understand? The difference. So the difference here means when you minus, maybe I'm going to minus my credit with my debit. That's different. The difference of this guy is now the balance I'm going to have. So the excess of debit side, the excess of debit side over the credit side indicate a debit balance, while excess of credit side over the debit side indicate the credit balance. So if the two sides are equal, there will be no balance. Okay. So on the general note, the balance is drawn at a year end, at the year end and recorded on the lesser on the on the lesser side to make the two side equal. The balance is also known as closing balance. The balance is known as closing balance. Understand? So the closing balance of the current year becomes the point opening balance of the next year. Okay. So the closing balance of this year, like if you close your year this, let's say in December 2031st, you close your account this year. Now that money you have in your bank account as your current money this year will become an opening balance for next year for you. I think it's something that is very straightforward anyway. Something nice. So this is just so this guy, what this ledger is actually talking about is like it's just like the main storage house of all the accounts of a business. So if you have a business, every transaction that comes into it is going into an ebook, or it can be an electronic book. It can even do an it anyhow, but then it's going to be a a book. The ledger is a book that contains all your businesses accounts, every transaction that goes in there. So if you look at it, you can have your cash account is going to go into that place. Your sales, your rent, your wages, your creditors, asset like even assets thing, the asset like equipment, vehicles, furniture, all those things will also be in your ledger book. So these are actually going to show in a very detailed way think so. So we have some importance of it. We have the following are the important utilities of ledger account. So a ledger account keeps all permanent record of all financial transactions in a classified manner, and it shows detailed financial information of a business. Understand? It show all detailed financial information of the business regarding receivables and creditors, asset and income, expenses and all that. So the the ledger account also. So this is an account of it. It helps you to prepare a trial balance. So I think the trial balance is also part of this. So as we go down, we'll understand what is a trial balance. So you understand. So this account it helps you to prepare a trial balance in order to check the arithmetical accuracy of the recording of the financial transaction. So So what this is trying to say, like for a real life example, right? Real life example. Let me use Excel for real life example. So let's assumption. So let's say okay, let me use Rejoice or Chison uh beauty salon. So we are going to do something simple. Jason Beauty Salon. So Jason has a beauty salon, like maybe where people go to barb, or I guess maybe where people used to make hair. So why she have it like she's going to have different accounts. You understand? So we want to create like a two accounts. So let's say she have accounts for this is equipment something like this. And then in this account she have maybe he have cash. You understand? On this other side. Remember, a ledger book is going to be like so. This side of the account is going to be debit, right? Right. So it's going to be debit. On the right hand side is going to be the on the other hand on this side is going to be credit. Yep. So this is credit. Okay. So she have 120k, 120k debit, right? 120k. So obviously debit. So in so this debit here, so we have debit cash debit of 200k, and we have a cash account. This is different account. that you're trying to prepare. This is another account. So we now have this side again. We have debit, and then we have credit. We have credit here. Credit. So so what happened? This, let's say this 200K that I put here for debit was for maybe she buy a hair dryer. She'll choose some buy a hair dryer that would 250, 220K. Do you understand? So now in this account, this equipment account, this 200K for this hair dryer is debit account. You understand? So in the cash here now, right? So now in this, if on this particular account of cash accounts, are we putting this money, this 200K on the debit or on the credit? It's a question for us.
Sorry, I didn't get that. What did you say?
So now this is an account. Yeah, this is an account, and this is another account. So on the equipment account where you bought a hairdryer or and just bought a hairdryer for one that worth 120K. So in the equipment account, that is on the debit side, right? So now on the credits on the cash account, where is are we putting this 200 120K?
Sorry, I don't have any idea.
I think that should be on the credit side. Mm.
Okay, okay, you can explain to us. Oh, you think why? Why is it like? Why do you think so?
Because since she's buying a hair dryer, so cash is going to be moving out of the account.
Okay. Yeah, I think you. Yeah, I think so. I think it's supposed to be on the credit side. So now let's just okay. Why is it on the credit? Let's okay now here with this 200K, 120K. We'll put it here now. So now, why is this here? If you look at this now, this is a transaction. This 200K is a transaction, right? So now this transaction, it so he buy this equipment here and pay cash. Do you understand? He buy the equipment and pay cash. So think think of what happened to cash. What actually happened to cash? When you pay cash, right? When you pay cash, your cash reduces. Abi? If I transfer money now, my cash it reduces.
Yes,
Okay, so
yes,
now, so when and so like these are the accounting terms. So I actually kind of studied this. So now, for instance, in accounting, when an asset is like when an asset is like cash, when the asset decreases, you this hairdryer is an asset that you bought. You understand? So this asset actually bought this. So when you come to the account, so this is these two different accounts that I think this in one of the past question paper that I saw, saw a question about this thing. One of these past question paper. I think I was trying to solve it, and I got it. But what the person that tried to explain this to us was actually right. So the money is actually in the credit side of the account because the money was actually here in the cash. You understand? The money was here before you were able to use it to pay for here to debit it because the cash, the money was you had the cash. So it was your money. Do you understand now? So I had the cash in my cash account. Then I use that cash to buy something. So in this account, this 120K is a debit in this particular account. Do you understand?
Yes, I understand. But also, I have a question.
Okay.
Will there be any time where there will be money on the debit side of the cash account? Like, can you just give a scenario, maybe one explanation?
Okay, when there will be debiting in the cash
Yes,
account.
when the yes, and what particular scenario will I have a debit? Like, will I move to it the debit side in a cash account? Because I think if we should go by this ideology, everything should be credited because we just have money in our account before we get something. I don't know.
Sorry, I didn't get the last thing.
Okay, I think that okay, from your explanation, you said the money, this 120,000 was already in the credit side of the cash account before she purchased the equipment, that's the air dryer. So what I'm
Okay.
asking is, will there be any time where there'll be a cash in the debit side of the cash account?
Is there going to be debit in the cash account? Is that what you're saying?
Yes, 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 yes. When will there be a debit on the cash account? Because I think we always have cash to purchase something, so we always have credits in our accounts. Like, I don't know if that makes sense.
Okay. So let's look at a scenario in your account, in our debit account, right? So a
I'm
scenario
sorry,
like,
please, can I say something? Sorry.
okay, okay.
Please, can you ask your question again?
Okay, my question is
No,
okay, based on
him.
him. Okay,
Okay, me.
Yes, please.
The question I asked before she asked,
Yes.
what question did I even ask you?
Mm, mm.
Do you, and I think the question I was asking was, so I was saying that we have 200, we have 120K here, and
Okay.
we have 102 and 120K in equipment account, and then we have another account which is the cash, right? And then I
Okay.
said, okay, this, if you come to the account, to the cash account now, where is this to 120K? Is it going to be on the credit side, or going to be on? Is it going to be on the debit, or is it going to be on the credit side?
I think it's going to be on the debit side.
It's going to be on the debit side. Why?
A question. The 120 was formerly in the credit side before the equipment was purchased, right?
Mm,
Okay.
I'm getting you.
It's a question.
Okay, you said the 120 was in the credit side
Credit
before.
side, yeah.
Yes.
Before the equipment was purchased and now on the debit side.
Okay.
It's a question. I'm asking. Sorry, I just joined the class not quite long, so I'm just trying to grab it.
Okay. So now, from the what I read from, I think I'm trying to see something. Someone want to? Okay, somebody hand is up. Okay, go ahead, Mr. Laputa. The person that the hand is up, can go ahead.
Can you hear me? Can you guys hear me?
Yes.
Yes.
Okay, so for clarity, I want to confirm. I think I might be wrong, but I think based on the question, right, we
Yeah.
can determine whether it's credit or debit. in the sense that if it says that somebody paid money, say maybe Mr. A
Mm,
paid money, say Mr. A bought um say maybe a car from Mr. B, right?
yeah.
That would mean that Mr. B was credited and Mr. A was debited, right?
Mm,
So if we're doing the table that has the date, the narration, debit and credit, it means that if we explain maybe whatever goods was purchased, it means that Mr. A purchased from say a car worth 50K. So under debit, that would be Mr. A, and under credit, 50K would be on Mr. B. I'm just asking for clarity. And then say maybe if the question is switched in such a way that um say maybe somebody um um deposited money, or maybe somebody went bankrupt, and then another person um somehow paid the person's bills, then that can influence where we impute the figure for debit and credit. I'm just trying to clarify. I'm not 100% sure if I'm right, but please correct me where I'm wrong. But I'm
okay.
guessing that it depends on the question to know where to impute debit and where to impute credit, to know who was debited and who was credited. So please, can you help me with clarity on what I said? Because I'm not 100% sure if I'm right, so that I don't
Okay.
confuse.
Yeah.
But
So
that's how
so
it
I
is.
so to understand this, let's look at this like in this manner, and then let's try to understand the background of the cash. What this mean, like a cash account. You know, a cash account in accounting, a cash account means the cash account. Cash account. Okay, a cash account is debited when cash comes in. So now let me just give you guys a scenario like this. So we can think of this. Think of your wallet or your bank account. Let's say let me have a wallet like this. So if I have a wallet like this, right? This is my wallet, and I'm just trying to paint a scenario that will be more visible for everybody. So when I receive money into my wallet, my balance, let's say I have in my wallet I have like 3,000 naira, and then I receive like 200. I receive 200. That means the balance in my wallet is going to go up, right? That's the balance in my wallet is going up. Now when I spend money, my balance is going down. Do you understand now? So now now, so what this means is this, like this balance, this my wallet now is my cash account. So when I spend money, my balance go down, right? When I spend, like, so let's say I have 3,000 naira in my account, in my wallet currently, and then I've added 200 to it. So to say, okay, this this is the 3,000 plus 200. So I my see my balance is going up, and so now tomorrow now I have to spend money, and then I have to say, okay, I want to buy something for 5,000, one for 500. I want to buy something 400. I am buying something for 400. So it means this is going to be this. My balance in my wallet is going to minus what I'm buying for. So my balance just go down. So now when the balance increase, right? Hello?
Yes, we can hear you.
So in accounting, what this means is like when this balance increase, this balance, when there's an increase, I don't know that you guys can hear me. My network.
We can hear you.
But hello, hello. That's the okay. So in very simple understanding of this thing, yeah, it is not like it is not you saying this thing like the race now. So what happened here is this: if if cash goes into the debit now, cash okay, cash cash goes into debit side, right? Cash goes into debit side. We are talking about the cash account, right? We are talking about the cash account. Now this cash account now, cash goes into the debit side whenever money enters the business. Do you understand that?
So you're saying if money enters the business, then it
It,
goes into
it
debit
goes into the
side.
debit. It goes to the debit side.
Okay.
It goes into the debit side. And when cash goes now, whenever cash goes in, cash goes into the credit side whenever money leaves the business. Does that make sense?
Hmm. Not exactly because it's just like I don't know. It's just like okay. So in typical real world, if you do
Mm,
a transfer, if I send say if I send 1K to you, the
mm,
alert I get that I've been debited, which means cash left me, right?
yeah,
And then the alert you get is that you've been credited. So that's why it's confusing. I don't know if it's just me. It's confusing for.
yeah. It's confusing, right? Because it is this is more. I was talking about this guy. Let's look at one example here. We are looking at this in a very layman understanding where it should be, but it is this is basically it's an accounting thing. That's why I said if anybody if you have any accountants in this meeting, the person would have given us more understanding to understand this. Understand? But the truth is like think of the cash think of the cash account, right? Like the business like just the example I was giving about the wallet. Think of it as a business wallet, right? So now when someone gives you money, like when someone gives you money, your balance is going to what? Increase, just like when it happened there like that. And then this is like in a normal sense, right? When somebody gives the money, your wallet, the business wallet is going to go up. That is, the wallet is going to increase, and then your account balance is going to be bigger. But then in accounting, An increase in the cash is recorded as debit. Does that make sense?
So
Hello?
really, I'll say something. So,
You say?
yeah, I'd just like to say something to so that people can just be clarified. So for me, for what I've listened to from the lectures and all, I just take it as words and opposite. In a normal way, when I receive money, it's supposed to be a credit. But
Mm-hmm.
in a business sense, a debit because you are paying it into the business. So the business
Okay.
recognizes that it is owing. It is not for
Okay.
the because you are not you are a separate entity from the business. So when the business receives money like that, it is seen as what? As debit. So that's just my own way of understanding. It's not the same as you transfer money to me, I transfer money to you. In an account with the business. So just look at it as the opposite so that you can understand better.
Okay. That's good then. Thank you. Let's just calling somebody's line.
Yes, start from there. You can get more clarity. Don't know if that works.
So we'll just continue then. So in this our own material here, I had the example. So I think we already discussed. We already talked about the importance of ledger, and it organizes all financial data clearly. It helps to prepare the trial balance.
Sorry, I don't know if you're sharing your screen now, but I can't see it.
Oh, sorry. So sorry. So sorry. Okay. I was talking about this, like the importance of it. We've already seen it in the general notes, and then we're looking at the practical scenario here, and we look at. I think are we all? I think we all have different lecturers for this course, and I want to check my WhatsApp. We have done this lecture stuff, and I want to check. I just want to check the note that my lecturer sent. 803. 803. Is this one? So we'll just check because I've not opened that guy's book, but this is it here. Think okay. It's not this very crazy. I can still cite okay. Just we have what we have done already and posting the process of transferring the debits and credit item from the journal to classify. Looking at it's just what we have read that he just put it here. He didn't do a kind of a summary thing that I was expecting. Okay. Mm, that's all. Yeah. If I enter lecture later, I'm going to ask him questions here. So I'll ask him questions about that. So I'll come back to tutorial and we'll clarify it. Yeah. Right. So let's continue, right? Okay, so we are trying to explain this, and then we're looking at the practical example, like a scenario, yeah, where I have it. Let's say throughout the week. So we are looking at a boutique store, like Elegance Wear Boutique, and so we have the throughout the week. This transaction occur at the boutique called Elegance Wear. So owners bring 200K to start the business, right? The owner bring 200K to start the business. That is cash, right? That's cash. Cash. They bring cash to start the business, and then buyers buy. then buys clothes worth 100K from a supplier on credit. Then he sells the clothes to a customer for 40,000 naira cash and then pay 10,000 naira for rent. So each transaction affects two accounts. That's double entry. When then we then transfer this to the ledger, right? So this is the ledger that we have here. So that's we have they say the transaction affects two accounts. So if you look at it here now, this 200K was the 200K that he brings into the business. Now, it's at his debit here and his credit here. So this is the capital, his debit, it's credit, and then the purchase of goods. He purchases goods here, which is he buys items. You understand? So just the names, you buy the items here what to 500K debit, right? So this is a debit. So the supply clothes for him, which is supposed to that what how much it's okay, this is the supplier, this is the creditor, this person. So this 100K for the clothes is this one. So he buy clothes worth this on credit. Do you understand? So it's going to be 100K. So this is 100K on this account here. So the cash is this is cash here on 40K cash again. 40K cash, he sells clothes to a customer for 40,000 naira, which is cash. So on the sales is credit. You understand? It's credit on the sales. So the rent here, the rent here, he pays rent of what? He pays rent of 10,000 naira for rent. 10,000 naira rent, and then the rent is the item. This is the transaction. Now remember, what is recorded in all this book is this is the rent here is an item, then the transaction was the cash transaction was credit. This is credit. Do we understand this table? Or the table is a bit confusing. Okay, so we have no answer. We have no response. So we'll just continue and then we'll see. So we have so now all this goes into the respective ledger account, which is the cash account and the sales account. So remember, the accounts we have here is for sales and cash account, right? So now the ledger helps the owner know how much is left in the cash, right? How much is left in cash. So how much is on he how much is on to suppliers and how much profit has been made. Do you get? So we have different types of ledgers. We have the general one that contains all main accounts like the cash, sales, rent, and capital. And then we have the sales ledger, which is receivable. This one is receivable ledger, shows what each customer owns. And then this one has the purchase one has the payables ledgers. It shows what the business owns and each supplier. So this one here, this one is for sales. You understand? It shows you what the customers are owing you. And this one, the purchase one, shows you what the business is, what businesses that what you are owing other people, like suppliers and whoever you are owing. So this is the types of it. We have the general, we have the sales, and we have the purchase, which is this is for the receivable, and then this is for the payables. So we have study two. We have the study two of the same module one. So this is the main. So we are looking at the trial balance. Okay. So guys, should we continue, right? Okay. Now this is showing us. I think this should be in this material too. We have the trial. This guy. This material is so fucking annoying. we have the definition. The definition, and we'll start from this material first. So when we begin by what we may begin by saying that a trial balance is defined as a schedule or list that shows the debit and credit balance extracted from the ledger. Now, its main purpose it is to show the arithmetical accuracy of the ledgers. So furthermore, it ensures that debit and credit balance are displayed in the ledgers are compiled. You understand? So Kazina learned in 2006, they actually said this thing here. They said this. So now the objective of the trial balance is to prove the accuracy of whatever you are entering in your ledger. That is what it means. So we'll look at it together. So the all ledger accounts must be balanced off and entered into the trial balance. So what is the use of trial balance? The main use of it is to help in testing the arithmetical accuracy of the double entries in the ledger. And then it helps in the preparation of financial statement and it also assists in detecting errors of posting, right? So when the time you go through this material, you can see, so they're asking you what is it? What is a trial balance? So for me, I can say this like this question that we have, what is a trial balance? I can say a trial balance is a list of all account balances in the ledger arranged into maybe like so we can just see that with this our material here, we can look at this way. So we have the meaning and purpose. So after posting to the ledger, we check whether the total debit equals the total credit. Do you understand? So this check is called the trial balance. So it ensures that the arithmetic accuracy of it ensures the arithmetic accuracy of the book. So not that there are no errors, but that double entries are correctly recorded. So if you look at this account now, after posting to the ledger, we have the cash. This is under debits. We have these are all the debits are here and all the credit are here. But at the end of the day, you can see that the total of everything is going to be what? The same. Can you see? So you can so you know from where we are reading, we from the beginning, it was already giving us the when we are reading about the ledger, the characteristic of it, it was telling us about the both side. At the end of the day, both sides have to be the same. Do you understand? Okay, somebody, Chison, go ahead.
Okay, my question is that when we started, I think that's for the ledger. We talked
Okay,
about opening balance and closing balance.
okay.
So and now we're talking about trial balance. This trial balance, because I think when we talked about the opening balance and the closing balance, we're talking about debits, much of debits and then credits side. When I
Mm,
was seeing our debit and credit sides are equal,
mm.
I don't know if it's possible to explain based on this framework we have right now, based on this trial balance, the opening balance and the closing balance.
Sorry.
Sorry, do you understand what I said? Did you get me?
Okay, so now from what the from where you start your question, like say you are asking that why is it that the debit and credit side have to be like it's equal, Abi? On this. Now, if you look at
Yeah.
this now, let me go back to this place. Understand, this ledger here is where now understand what is a ledger. A ledger is an account where you put it's just like a record, like a book or a book where you keep all your account record inside. Do you understand? And when you're talking about the accounts, we have several accounts in the business. So we have the sales account, we have the cash account. If you look at it here, we have sometimes we have the cash account, sales rent, all these accounts. Now all these accounts are being recorded into a ledger. Do you understand? So this is keeping your accounts. This is just for you to keep all your accounts in one place. This book is like a final place where you keep all your account. Now that closing balance and the whatever we are talking about, it is not. This is now this trial balance we're talking about is a different thing entirely, right? It's just like another. So now that we have a ledger, but since we have a ledger, now we now have another thing that is we are using this one now to actually confirm what is putting in what we have in our ledger. Do you understand? So this trial balance is just another, it's a kind of another book, but that is giving this name. It's not like it is the balance of what is imputing in the ledger table. Are you getting me?
Yes, yes, yes. I
Exactly.
got you.
So now this is like another thing. Just like you just give it this name. So what this trial balance is just another book that you now all the data you say okay, all the accounts, the data or the values you put into the all the accounts or the values you put into that particular account, put them into the trial balance. Then let's see if what you are saying is actually true. Do you understand now? Ehen.
Yeah, I get
So
you.
that's the meaning of that account. Perfect. So now, if you look at this, so the question you were asking, if I want, so now do you want to know why this side, the both sides are equal? So both sides are equal. This means posting are correct. So just imagine if I put this. So if you notice when we are putting this value here, if you notice whatever we put here, 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 we put here. So at the end of the day, if I add up this thing and it's not giving me the same thing what is here, then I know there's an error somewhere. Because what I have here is just the same thing what I have here. Are we correct or not? Right? My God, my battery
Yeah,
is getting really low.
yes.
Fuck. So if you look at this now, he said that after posting to a ledger, now looking at the trial balance. Now, after posting into a ledger, we check whether the total debit equals the total credit. This check is called the trial balance. Now, it ensures the arithmetic accuracy of the book. Not that there are no errors, anyways. And not it's not like there must be errors or that's not what you're saying. But they just have to do the double entries just to be correct. That's what this is doing for you. Do you understand? So uses of this child balance. It uses to detect the mathematical errors that may occur in entering all the. Now, this data you see here now is because it's small. Just imagine a business that has been doing transaction from let's just even from January. Okay, let's just say for one this for last month of October. You can see a lot. This thing will be very much like this table will be long, will be long, and there are actually chances that there are going to be some errors there. So this table now will now help the business to confirm whatever they are putting there. So imagine that at the end of the day, what they put here now is more than this. They have to check. They have to check their record again. So this is just like a double two-factor authenticator to check that oh what you are doing here is actually correct. So by the time we add up and we have this and we have this, then we are like okay we are good. Let's move on. Do you understand? Hmm?
Yes, well understood.
Okay, so thank you. So if you have a question where they ask you, why do we prepare a trial balance? It is to test the accuracy of what? It's just to take the accuracy. That's number one. And then number two, why are we doing that? Why do we prepare a trial balance? Is to test, is to detect some errors early before we go far. So we use this trial balance to detect if there are errors in whatever we are computing in our ledger book. So we also help this can also help us to prepare our financial statement at the end of the year and then or at the end of the month, at the end of the week, at the end of the year. It's also to help us make our work easy. Do you understand? That's some of the things you just need to understand about the trial balance. So if you look at it now, He said if you look at how this guy work is that each transaction affects at least two accounts. That is double entry. You understand? So we'll continue. Yeah, we want to continue to this level. So this one, this like I said, this trial balance is just whatever you put here in your ledger, you are bringing it here. Do you understand? Then you add up and you get this, and then you're cool. It's just like a double check of double entry of what you already have there. Okay. Yeah. I've taken my light and I need to. So you can see all those things we're talking about errors. Errors are an intentional mistake that we make in the business transaction. And maybe it's posting in the so okay, I'm trying to look at so all these things and again I'll actually encourage you that even apart from tutorials, try to read the main note. You understand? So once you read the main note, and when we come to class, we can actually now be just be getting more understanding. Just small time. You can be reading it small. Myself, it's small that I do read. It's not like I want to read everything at once. Exam is not close. I've not seen exam yet, do I know? So just small I can be reading. So we look at the final accounts. So this is the income statement. So the meaning of this is like an income statement or the profit and loss account shows whether the business made a profit or a losing during the period. So we can have if so this income statement you just see another
Sorry, I can't hear you. Your audio is breaking.
okay, how about now? Can you hear me? How about now? Can you still hear me? Mm, I think we can
It's still the same thing, but you can go on.
oh, shit. Okay, so I'm saying we're looking at the study session 3, which is the final account, right? So the final account is the same thing as the income statement. And then what is income statement? The income statement is an income, the income statement, or you can call the profit and loss account. This shows the business. It shows whether the business is making profit. You guys are lucky. My system is about two of them. They brought light. So we are good. So let's just do this one then. We'll close because my system was remaining us 7%. So sorry, is it everyone that is not getting me or just so that I know how to adjust myself? Other persons, can you hear me?
Yes.
Okay, thank you. Okay, so we are looking at the income statement. So an income statement or like I said, an income statement or the profit and loss account is a financial report that shows the revenue end at the end of the year or at the end of the month or at the end of the week. It show you the revenue that you are and the expenses that you have incurred, that the expenses that you incurred, and the profit or loss for the period. You understand? It's actually answer one big question like, did the business make profit or loss? So what an income statement is trying to do for you, it just help you to ask. Like I can come to a business, I guess, are you guys making profit or you guys are losing? So that's what the income statement is doing for you. So it will help you to once you do your income statement, it will show you all these things. Can you see? So if you look at the structure, like the trading account, calculate the gross profit, and then we have
Sorry, your screen is not visible again. I can't see your screen.
Oh, sorry. Thank you very much. Thank you. Thank you very much.